Jason was asking, with it very close to our stop, would you just sell the position? And you can see now exactly why we don't do that.
It's coming back now. Yeah, I'll bring up a current chart of it here. ENPH. So it did come down, but see, it's getting a pretty good so far. If it closes here, this is great action. This is exactly what you want to see. See, again, while those who get stopped out and those who are undisciplined and those who are in there creating the noise, we being one of them at times, while they're in there getting whipped around, they are forming the basis of your success as they're getting that process of weeding out the towel, getting squeezed and the water coming out. This is just another iteration here. And if we can tighten from here, this stock is proving that it's going through a very nice natural changing of hands from weak hands into strong hands. And this stock could be set up in short order here, but you got to be real careful about, if you're going to get in there and trade, if you start try to trade every little blip, you're going to be in and out and you're going to be losing money because you're going to just get whipped to death. You've got to have a cutoff. Now, yes, you can trade really short term if you want, but then you've got to truncate everything. You've got to, your gains got to be, you've got to adjust for all that. And you're going to have a lower success rate. You're going to get stopped out a lot more times. So it's all maintaining it's all adjusting and maintaining that risk reward relationship. So if you want to sell it here, you could sell it, but when it gets really close to the stop, that's the time where I'm not going to sell it, because if I put a 6% stop and it's down 5, why would I sell? I get 1 more percent to know if I'm right or wrong. I might have told this story before, but good friend of mine who was one of my very first assistants back in the 1990s, we bought Stryker. We bought it on the same day. He used to sit right across from me. Our desks were right next to each other. I bought Stryker. He bought it. Stock took off. And anyway, stock came back and came right down within 1/8 of a point. Back then we traded in eighths. Came within 1/8 of our stop. It was like an 8% stop. He said, "I'm selling the stock." I said, "Why would you sell it? It hasn't hit our stop." He goes, it's definitely going to hit the stop. It's 1/8 away. It's 1 tick away. I said, "Well, you could sell the stock. I'm going to give it the 1/8. Why would I sell it now if only 1/8 more? I'm not going to lose a whole lot more." Long story short, to this day, he still talks about it. He's brought this up to me many times. The stock turned around, never hit that eighth, and went up and tripled from there. And I made a double on it. So, again, now the caveat to that is it's at the end of the day, right? And the stock is going to close right near your stop. Now you're taking the overnight risk because you're so close to your stop that the next day, if it gaps down, let's say it gaps down 3% the next day, now you're going to get 2% of slippage. So that would be a time where you might, if it gets close and you don't want to take that overnight risk, you've got to understand that now I just increased my overnight risk, because now it's closer to my stop and a gap will give me more slippage. So see, there is a little caveat to that. So your thinking is not completely off. It just has to be put into perspective.
I still laugh when I hear that story. I've heard that story for decades. On page 488, if you want to go back to the book.
Those of you who heard the story about the throwing the money out the window, and the friend of mine that was in the car and refused to throw the money out the window with me is the same guy, by the way.
Yeah, I was going to say.
It's the same guy. Yep. And I told that story again. I'm not going to tell the story. Maybe at some point, if you guys want to know, there's a link. Someone did a story on it. It was interesting the way they did a story on it. But my friend, he came to my house to visit me one day, and this is literally 30 plus years later. And I opened the door. I didn't see him in a lot of years. I opened the door, and he went, his very first words, he said, I should have threw the money out the window. And then he gave me a hug. I'll leave you guys hanging who don't know that story.
Before you go back to the workbook, actually, PWR, Mark.
PWR, I saw that one on the weekend. It was setting up in this couple of handle type pattern. It looks pretty good. It looks pretty good. I'm trying to remember why I passed on it as far as putting it up. Yeah, it looks pretty good. It's the building heavy construction. I know Floor is doing. Is that the same group, Floor? Because Floor's was broke out, and that was one I put. Yeah, Floor's number one. There it is. So let's take a look. Whoops, sorry about that. Go back here. Floor. Yeah, that one came out. And we actually put this on focus list a couple weeks back, right over here. And that's working pretty good. So yeah, I think it looks pretty good. The PWR looks pretty good. Again, here you have your top stocks. It's the second relative strength stock in the group. So that looks fine. I think I'd want to see maybe again a good market. I'd be all over a chart like this. I would already be buying it over here, right out of here. I've been buying it coming right out here, and then if it comes out from here, I'd be adding to it. That's sort of how I would play this. You even got a little low cheat right here, but with a lot of overhead. So this is a bit low, a little bit below the 50-day. But I would definitely here as it shakes out and then breaks out right here, and you come out in the volume, you come out in the earnings right here. That's a perfect spot to start entering it. And then you get the natural reaction. It holds up. We get into new high ground, add to it. So I think you could buy this if it comes out. It got through the earnings, had a pretty decent response on earnings. And now that it's pulled back, I'd like to see it tighten up a little bit more. Optimally, this is what I'd like to see happen. I would like to see this back off a little bit and tighten up just a little, maybe even drift back a little bit, and then come out from there, maybe just a little bit more, and that would be really, really setting up perfectly. You see, right now, trades aren't working well, and we're in a bear market. So I'm going to raise the bar for the requirements, because in a good market, you get bailed out. You make mistakes, the market bails you out, right? You've got the wind in your sails. In a bad market, you do things near perfect and you get penalized. So I want to, at the risk of missing stocks moving, I'm going to make sure that they're perfect. I want really, and if they're not perfect, I'm going to position size accordingly. And I'm going to offset the risk in one way or another. But generally speaking, I want the better setups, the better plays, the highest relative strength, the real crisp entry points, the lowest risk entry points. And also, I may not play everything. I just may pass on a bunch of names just simply because I don't want to get too involved in the market right now and start shotgunning, because again, it's not working. So I don't want to get myself enamored with too many names.
PARR, another name, have not quite similar, very close to 100% move, but not quite meeting that criteria.
I'm playing this, playing ADM remember I said I was going to play this like it's the daily. I just cut half off here. So I cut half off here and sort of free rolling now, a little bit in the bank. It's rolling over here now. But again, if you're swing trading, I want to make sure I reiterate this. You wouldn't want to be selling this quickly. On the downside, if it pulls back here, you could let this squat, give it another couple days, a couple weeks to see if it could reverse a recovery. Stick to your original stop in the beginning of the trade. Go ahead. I'm sorry. What did you say about the question?
PARR, another one that is not quite 100% move.
PARR. That's the yeah. So let's see. Just looking at the weekly here. And I'm going to pull it up here. No, Market Smith. Whoops. Yeah. So as a power play, I guess.
Yeah, not quite 100%.
Well, it falls quite short. I mean, it's not. Let's see, what percent? Yeah, 73%. That's not even close. If it was 98%, but that's not enough. So I would pass on that.
Question being asked: when you want to see the volume dry up in a pivot, does it matter if it's an up or down day? Does that have any influence on you?
What part of the pivot? An up down day?
Where the volume is drying up, like just before it breaks out?
No, no, it doesn't matter. But unchanged and having low variation, and closes that are close to the previous day close is even more constructive. The least amount of variation is better. So you're just looking for, because volatility and volume means supply. That's the bottom line. Okay. When you see volatility, you see volume, supply. All right. That's what you're seeing there. When now if stock breaks out and it takes right off and there's no downside, that's alpha, that's demand. Okay. So what you're looking for is those tight variations. And that is also on the close, looking at it from the previous day is something that is constructive, especially on the weeklies. This is what O'Neill calls 3 weeks, 4 weeks tight. There's a reason behind that, because those are the footprints of accumulation of strong money sucking up the strong hands, sucking up the weak hands. So, but no, within the pivot, real tight in the pivot, would it matter here if this day right here was down? This day here, you see this day, it's on the low here. I'm still going to buy it coming out here when it takes out that high. That's not going to change it. If it was up or down, wouldn't really change it.
So curious to see what your chart looks like on TRQ. It looks like a stock that a new issue, but I have some historical data on it.
No, yeah, it's a mining stock. I see how it's showing pretty tight action here. TRQ.
That's
Yeah.
weird. Mine looks completely different from that on
Mm.
TradeStation.
Yeah, it's trying to tighten up over here. Volume's coming down. Doesn't look too bad, but it is a mining stock. Be a little careful with it.
Okay. A lot of the questions were more for the live trading day here, not as
Okay,
many
that's fine.
for the, but let me just keep trying to
We can
plow
we can,
through
we
these.
can stick to questions about today.
There was a question asking if you could just share uh, a quick explanation again of the difference between a cheat and a low cheat.
Okay. Let's go. Where would that be? The page, Bob?
Yeah, the three,
The three?
one,
No, to the three?
no, it's no, it's one.
I got it.
You do,
So
yeah.
the low cheat is going to be in the bottom 1/3 of the base, and the cheat is going to be in the middle 1/3, and the handle will be in the upper 1/3. So just think about it, as the low cheat is, it turns up and it has that pause, but you've got some supply to the left. When you get to the cheat, you have less supply, and you get to the handle, you have the least amount of supply or no supply if it moves into new high ground. So the difference is it's just lower in the base, and you have more supply. That's why as we go down in the base, it becomes more of an expert buy, because you have to analyze the left. You got to look left for traffic and analyze the traffic a little bit more accurately, because you've got more potential selling and more supply. So that's why the lower you go, you have more opportunity, of course, because there's obviously you're buying it lower, but you also have more supply to work through. So that's where you've got to make that determination of how deep it is, how far back it is, and that will sort of guide you whether how strong you should be playing the low cheat versus the handle or the cheat.
On page 314.
314, yeah. Yep.
uh, why are you buying where you're buying? There was reduced volume leading up to that and also much easier. What is telling you to buy at that exact moment is the question.
I don't know what that means. There was reduced volume much easier. Where?
I guess,
Where
I
was I
guess,
supposed to buy? I mean, I guess I could have bought this, maybe started buying this right here, but it hadn't taken out this previous high. And I don't even remember, when I saw this stock. David Ryan brought me this stock. Sometimes I don't see the stock until it's set up over here. I can't remember, but this cleared everything out right here. You got where everything got cleared out. And I think I actually bought it on the next day to make sure it was following through. Because a lot of times they'll come out and then they'll come back in, like we just saw, of course, today. And end phase just happened on Friday. So I got a little follow through. So I bought it on the follow through. I bought it on that second day. That I do recall. But whether I bought it the day before or over here, either way, the outcome would have been the same because the stock would have never hit my stop. Based on this little tight area, I definitely am not selling until this comes off a bit here and at least takes out these lows here in this pivot. So you wouldn't have been knocked out either way. You're the same exact outcome.
Page 211.
Yep.
Question being, why not buy it at the box? Because you end up buying it at the same price. It just takes longer.
Okay. So first of all, you're looking in hindsight. So we don't know this is the benefit of hindsight. That's number one. Number two, this is completely this is running right up the right side here and it's completely unsustainable. If you go back and you look at all the charts that you have in my workbook, if you go back, you look at O'Neill's, study the biggest winners where they came out of these bases, you will see very, very, very few that come out of a base that looks like this, because this is unsustainable. And this defies everything I just told you over the last 4 days, defies all of it. There's no time for it to go through the iterations and weed through the supply. So, and we have this big move here. So you obviously have quick profits for some people and you're running into supply. So the other thing too is, again, we're not looking for the lowest price. We're looking for the right price. So you're right. We are buying at the same price. The difference is also, well, I just saved 2 months worth of time or a month and a half worth of time. Time is money. Time is valuable. I mean, if you're buying stock here and getting the same exact result as I am here, I'm going to outperform you because all this time I could be using that money somewhere else, but with stocks that are moving. So, I mean, I could also use it and lose it. But the point is that it's opportunity cost. I'm tying my money up. You're tying your money up a month and a half, 2 months longer than me. I want to get to the result as quickly as possible.
You're being too generous too, Mark, in my mind. It's a little role reversal here because if you buy those red boxes,
you can drop the velvet hammer.
Well, if you buy those red boxes 1,000 times, you're a money loser.
Absolutely.
In my opinion. I mean, and
if you're using stops, if you're using tight stops,
well, if you're not losing stops, you're definitely a money loser.
Right, exactly.
Either way,
losing stops, you're definitely going to be a loser anyway. So regardless of what you do,
well, to the point we've made a few times, you want to think about this. You're not going to make one trade. This is a perfect example, though. The price, in terms of the fact that it's at the same price, is purely coincidental. The reality, though, is that if you buy those correct buy points 100 times versus the red box, the return distribution will be massively different between the two.
Yeah. This is where where a pair of eights morphs into a pair of kings.
Excuse me. Here's a good question that we haven't addressed at all. If having these setups and having the benefit of using options, which provides a guaranteed stop loss, being the purchase, the amount of your premium that you're purchasing the option, but you still have the ability to profit from breaking out of a VCP with low volatility. Your thoughts on that?
So you're saying using this strategy, but just using options. Mm-hmm. Yeah. So you could. There's a gentleman that was a friend of mine I've known for 30 or 40 years, does precisely that. He's in Canada. It's been very successful. You certainly could. The problem with that is, or the challenge is, a few things. One, a lot of stocks don't have options. So that's number one. So you do this analysis and you find all these stocks that are setting up, especially if they're smaller mid cap. In the mega cap era, it works a lot better. In the smaller, when the smaller and mid caps are working, a lot of stocks don't have options, so you don't have that opportunity, and those options are sporadic, and there's not many strike prices and so forth. That's number one. Number two, when you're buying on or directionally trading, which if you don't directionally trade, you're taking the risk of being at a loss right away. I want to always be trading in the direction of the trade. When you do that, you're kind of, the options defeat your goal, because the premium and the spreads, everything widens with volatility, adjust. So there's premium too. So you can get it right. You can be right on the timing, but there's a lot of premium in the option. And now it takes, the stock is not going to move in lockstep unless you're buying deep in the money. And even then, sometimes, you're not completely apples to apples. You're not moving in lockstep. Sort of like an ETF. This is probably not the best example, but a triple ETF, over time doesn't move in lockstep with the market. It decouples. Well, same thing with options. There's wider spreads, there's bigger risk. And then of course the real reason is because their timing has to be absolutely impeccable. So if you go into a stock and now you happen to get it wrong, but it takes a couple weeks, while it keeps building that VCP, but it doesn't hit your stop, well, your option's worth less. You're losing money when you wouldn't be losing money in the stock. So there's a number of challenges. It doesn't mean it can't work. If you need leverage, if you want to use leverage, then that's a way to get leverage. If you didn't, you had a small amount of money and you wanted to use leverage, you could do that, but it will be challenging. It's not easy. It's making this much more difficult, and that's the bottom line.
Somebody was noting on your watch list, Mark.
Real quick, sorry, I just wanted to note that you see this here. This is very similar, especially if you look at it right about here to this example here. See, I'm not doing anything different. This, if you go back and you look at what I was doing back in the 1980s, 90s, or you go back and look at Coca-Cola in 1932 or whatever, it's doing exactly what Monster Beverage looked like. They're coming out of these same bases, but you can see, take a look at this here. You're making the turn here. You've got this cheat area. Now, the only difference is over here, it didn't come out and follow through. So maybe it's going to take a little more time. Hopefully this will end up looking like this and will break out and will work. But you could see the setup to it. Very, very, very similar setup in the footprint here, the VCP footprint.
Somebody made a comment that you had an R, the letter R next to your stock on deck AMPX. They were just wondering what that was for.
On deck, which one?
AMPX. They said
R.
they see an R on the ticker in the on deck list.
Oh, okay, hold on. I'll move that over. Here's my on deck list. Where? Let's see it.
AMPX.
Right here. You mean that little thing right there?
I guess so.
That means there's an alert. It's not an R, it's an A.
Oh.
It means there's an alert set. Right there. There's a, whoops, sorry. Right here. That just means there's an alert. See, there's an alert right here. This is the one that I'm watching that's tightening up here. Getting nice and tight here. You got this little cheat area forming. So that just means there's an alert.
Gotcha. ANET.
ANET, yep.
Which actually on a 5-minute is showing a nice low cheat.
Yeah, wedging up a little bit though. It's not the greatest, but yeah. This is wedging up a little bit here. It looks okay. I mean, I like to look at it and see what it looks like over here. 90 RS. Yeah, this is kind of wedging up here. I like it. You had a good see, earnings. Was that after? Yeah, it actually gapped up before earnings. It's acted well after earnings. It looks okay. Let me see the weekly. Again, a little bit laggardish, not really a strong uptrend. You can see, you're flattened out. You started rolling over here, started looking a little toppy, and it's holding up during the bear market, but not really looking strong like a leader. You know, you take a look at something like, and again, it might outperform First Solar, but when you take a look at something like First Solar, you know, this is looking a lot stronger. See, the uptrend is more intact here. You're really outperforming the market, just real strong relative strength line. I want to be in the more powerful situation if all things being equal.
Question about CLR. And guys, when you're looking at a stock that is like a flat as a piece of paper,
Yeah, that's a takeover. That's
almost always going to be a takeover scenario.
right. So that we're not going to bother with that.
STLD.
STLD, which is of course the steel stock.
Was that too extended? Was the question this morning?
No, I wouldn't say. This is a pretty good sized base. You know, this is a deep cyclical, and I've been asking myself, do I want to buy these deep cyclicals and these steels? You know, ATI is another one. Take a look at ATI, where it's, you know, trying to form a base here. Of course, not as looking as strong as STLD, but yeah, I mean, again, it's a matter of if I want to, you know, if I want to start really shotgunning here and buying everything that's moving out. It looks fine. I mean, you could buy it here. You certainly could buy it here. I mean, it's coming out of a really well-formed big base. You moved up on earnings quite nicely. I am being a little careful with the cyclicals, you know, here, I have to say.
There were two questions on
big deceleration earnings too. Look, about 500%, 187, 98, 10. They're decelerating in the earnings here. You know, 4 PE. When you start seeing these numbers are so dramatic, you know, way, way, way below. And I've got this big deceleration. Now I got negative estimates for it. I mean, this is just all over the place. This just reeks of cyclical, deep cyclical. You know, everything's inverse. You can see how you got the estimates next year are down. PE's a 4, earnings are decelerating, the stock's breaking out. So you could say, well, you know, trust the stock. Yeah, you could, but a lot of these cyclical moves, when they get to this point and they break out, they don't have the legs. So I am being more careful with the cyclical names at this point. I'm being careful with everything right now.
Look at that half of earnings, losing 50% year to next year. So curious, I've had a couple questions on Gilead and BIIB, and I'm not sure, guys, if you came this weekend and paid attention all weekend, how you're thinking these are entry points for.
Gilead is, you know, come up here, and it's certainly not enough to be a power play. It's just starting to turn up on the 200-day. BIIB is a little bit better. You know, you're turned up a bit here. You can see here they just got a new CEO. That's good. The stock actually gapped on that. We got through earnings, but again, an early turn here, not enough to be a power play. So, I mean, I would say you could have bought this maybe back here, coming out here, you know, when it first formed this little BCP, or right here off that pullback buy as it started turning off the low near the danger point. And that's where, you know, I entertained entering it there. I was thinking about entering it right here, but I just decided not to. But they did get some good news over here on this gap.
Question about Mark Ritchie, but just talking about when to be adding to an existing position in conjunction with your progressive exposure. Are you doing that? Really, paraphrase the question. Are you doing that within stocks that you already own, and when would you do it, or how soon before the stock kind of moves away from you too much?
Well, you know, any subsequent buy point, this is a good chart here to the left, this Intercept Pharma, because this is exactly how
that's why I brought it up for you.
Oh, good. Those 2 buy points stand on their own. And actually, this is an example where I bought some and then pyramided the position up. I think I might have even sold a piece of the first one and then added more on the second buy point. I can't remember exactly, but that's something I'll do from time to time too. But think of it this way, every buy has to stand by itself. So if you didn't buy the first buy point for whatever reason, and you're buying it subsequent, does this meet the criteria all by itself? And then ideally, that's exactly how I want to handle things. You know, if the name I already own sets up, perfect. Now I'm just getting more concentrated, but it's both. It's not either or.
Yeah. Let's take a little break, give people a little time to just rest and recharge a bit here, myself included. Let's take a little break. The market seems pretty quiet here. There's nothing. It doesn't look like there's really much that I'm going to do at this point, trading wise, except the trades that I already have here. ALNY, of course, is still just drifting down. You can just, again, think of this as a daily. Look at how many days down here and all these lower lows. See that those violations gave you the tip off. It hit those violations, and the train did not come in on schedule, and that gave you the tip off. And since then, it's just been down, 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 down. And even though, and now look at the daily. Let's zoom up on this. Now we've got a full blown outside day. So now the volatility has widened here, and that's the opposite of what we want to see. Now, does that mean it's curtains? No, because it's still on this right side, and it still could tighten up here and go inside for a couple of days. And like I said, it would be perfect. So, but this could happen. This is what just happened. How I bought some here, and got knocked out. This happens all the time, and now I'm not going to take this off my list because it's still within the VCP building up that right side. But I'm going to look now for it to tighten up and reassert itself, and I want to see it improve. I want to see this tightness and this price action with the volume get even better, and then I'll be buying it again as it takes out that high, because it's still holding up nicely in that right side there. So out of that, ADM still in, took half off as it started to roll over right here. And now, I've got the option if I want to break even or finance my stop a little bit. Not really much. Yeah, the other ones. Now, DGII reversed everything. This is just par for the course. This is what's happening over and over and over and over. This theme just is been in force and just doesn't seem to be abating anytime soon. So again, this is why I'm being cautious and careful and not loading the boat on these breakouts, waiting until they start to work, and it's just not working. CVI, let's see, what's the other one I was looking at? Took out the low. See, that needs more time. So we're in a holding pattern here. We're just in a holding pattern at this point. Monster's up a little bit. We got to see if this is going to hold. This might be another one that ends up squatting and reversing everything. So that's the theme right now. So why don't we take a little break? Maybe we'll take a half hour. What time is it? At least 15 minutes. Why don't we take a half hour? We'll go to 2:45. Get some lunch. I only had 2 eggs for the whole day. I'm gonna grab a quick lunch here, and we'll come back at 2:45. How's that? All right, let's see. Let me go back here. All righty. You all set, Bob? Can't hear you.
Looks good.
Okay. All right.
I just
Be back
Skyped you.
All right, we'll be back in a little bit.
Recording stopped.